So we're going to kick things off with our first plenary session titled The Current Climate Landscape. The conversation is really about grounding us in this moment, looking at today's policy environment, capital markets, and the broader forces shaping climate progress right now. We'll explore both the tailwinds and the headwinds and how leaders across sectors are navigating an increasingly complex and uncertain landscape. As we get started, just a quick reminder to submit your questions throughout this session via the Whova app. Leading this discussion, I'm pleased to introduce Professor Chris Knittel. Chris Knittel is the George P. Schultz Professor and a Professor of Applied Economics at MIT Sloan, where he also serves as Associate Dean for Climate and Sustainability and directs both the MIT Climate Policy Center and the Center for Energy and Environmental Policy Research. His research focuses on industrial organization and environmental economics, and he is a leading scholar in energy and climate policy with work published in top academic journals and affiliations with the National Bureau of Economic Research. Please join me in welcoming Chris and the panelists to the stage.
Okay, great. Great to see everyone, and I'm very excited about moderating this panel. If what we were arguing about backstage is any indication of how this panel will go, it's going to be very exciting. There were several bets that were made, and no fisticuffs, but certainly spirited conversation. So I'm going to allow the panelists to introduce themselves, and then I'm going to start off with some questions of my own, but I want to remind everybody to be submitting your questions, and we'll turn to audience participation sometime around halfway through. So, Catherine?
Great, thanks so much. I'm Catherine Wolfram. I'm a professor of energy economics at MIT Sloan. My office is 5 doors down from Chris Knittel's.
Great. Hey, everybody. I'm Michael Carney. I'm one of the general partners at Engine Ventures. We're a fund that was launched by MIT back in 2017 with the mandate to fund breakthrough science and engineering across fields, and I lead our energy practice.
Hi, I'm Rob Meyer, or Rob. I'm the founding executive editor of Heatmap News, which you can find at heatmap.news. I'm also a contributing opinion writer at the New York Times, and I host a podcast called Shift Key for Heatmap.
Thank you. Mendo Krundevsky from S&P Global. I'm based in New York. I originally came from Melbourne, Australia. I have the pleasure of working with S&P Global as the head of sustainability and climate solutions. We have 4 major divisions. You probably all know the S&P 500, Dow Jones Industrial Index. In our division, Market Intelligence, and the Energy division, we have the pleasure of serving clients all around the world, and in my situation, North American clients with independent data, insights, and models on markets, and everything that impacts markets, geopolitics, climate sustainability, policy, all the global interactions. And critically, our job is not to pick a horse in the race, but to provide independent views.
Great. So you could see we have several fields represented. It's almost like a joke. We have an economist, a venture capitalist, a journalist, and a corporate strategist walk into a bar and start talking about climate. That's the mood that I'm trying to set here. So I'm going to start at a very general level. We'll certainly dive into all of the news stories of the day, but I wanted to go down the line here with just a general question of, over the last couple years, 2-3 years, what has changed in the world of climate in your world, your space?
I get to go first again?
Sure.
All right. Yeah. Over the last 3 years, I have been tracking the increase in carbon pricing that we are seeing globally. I've become a huge fan of a new policy that the European Union launched on January 1st of this year, the Carbon Border Adjustment Mechanism. We can talk about what that does. But one of the things that I have seen it do is really proliferate a conversation about carbon pricing. And in fact, we're seeing a number of countries looking at the CBAM and thinking, well, wait a minute, I don't want to be like sending stuff to the EU, writing a check to Brussels and letting them cash it. I want to put a carbon price on domestically. And so I have some work that shows that of the carbon price, of the sectors covered by the CBAM, 82% are already covered by carbon prices. So I've actually kind of been happy to see all the progress that has happened even over the last 12 months. It's been a nice distraction from what's going on in the US, I'll be frank. To see
And
with all the
Catherine, that
progress.
comes with the backdrop of several people believing carbon pricing would not take off, right?
Yeah, I mean, I think still in the U.S., the idea is that carbon pricing is dead on arrival. It's politically a non-starter, but it's working in lots of other parts of the world.
Great, yeah. Mike?
Great. So, Chris, I'm going to tweak your question just a little bit
Answer
because
the
I think
question you want to
I
answer.
actually think that if you think only on a 2-year horizon, you get a lot of noise and you get no signal. And to look at this industry, you have got to think about it beyond 2 years. And for me, the two things that I'm tracking, the most important ones happening today are, one, demand for energy is up. It's the first time in 25 years. It is up. That rises all boats. It's super important for innovative technologies because it changes the nexus of competition. And it's really great when the incumbents are sold out of all of their products for the next 5 or 6 years. So that gives innovative tech and energy ventures, the ones that I work with, a new lease on life. It's a new game and they can win. And so that's really exciting. And then the second thing, if you look back a little bit further, we have proof points of real change in the industry. And so you take fracking for gas and recognize the environmental implications of that. But in 1998, Mitchell Energy fracked their first well. By the end of the 2000s, the US was the largest producer of natural gas in the world. Take solar, take batteries, over the 15 years from there, from 2010 to 2025, they outpaced every aggressive projection that was out there for solar and battery deployment. And the cost curves came down massively, 20% learning year over year. This is an industry that can change. And 10 years ago, I started a battery company and we didn't know that it could change that fast. Today, if you're starting a climate tech venture, you are playing a game that you can win, and there are data points to that. I think that's really important.
Michael's point was great, because if you're thinking in 6-year cycles or 10-year cycles, as a journalist, I'm inclined to think in, 24-hour cycles, 2-month cycles. Honestly, my answer to that question is what hasn't changed in the past 2 years, because you go back 2 years and climate was triumphant. When we started Heat Map in 2023, so we cover climate and clean energy, decarbonization. When we started Heat Map, we launched in 2023. The Inflation Reduction Act had been passed the previous summer, and our thought was, well, this is great. You know, there's all this climate policy passing at the federal level, and we basically spent the next year and really 2 years covering the implementation of the Inflation Reduction Act. And we've had the pleasure for the past year or so of covering the disimplementation of the Inflation Reduction Act. And we've learned a lot from that, and of course, a lot of policy that was passed 2 years ago, and I think a lot of momentum around climate has changed. I think if I were to highlight two big changes that have happened in the past 2 years that might provide some tailwinds for climate and decarbonization and the shift to clean energy regardless. The first is the rise of an energy security frame and an understanding that, I think particularly in the United States, but also in Europe, China is now ahead of the United States on a number of manufactured clean energy technologies, including solar, wind, electric vehicles, and batteries, especially lithium-ion batteries. And that has historically, like climate people have kind of made a big deal out of this because we're like, the US should be doing these things too. That's rapidly becoming a strategic issue for the United States, as we've seen in Ukraine, as we're seeing in Iran. I promise not to get into Iran in this answer, so that's as much as I'll touch. But clearly the America's failure to build a modern short-run manufacturing system that can produce state-of-the-art technologies in a relatively in a state-of-the-art way, and producing electronic technologies is becoming a major strategic deficiency for the U.S. And I think increasingly, when we think about EVs in the U.S., we're going to think about them as a decarbonization technology, but it's just like a strategic need for the US to have a domestic EV industry. It's a strategic need for us to get at least to meet China on lithium-ion battery technology. And I think that rise of energy security as a frame is has been a tailwind for clean energy and the decarbonization cause, let's say. I think the second thing, just to piggyback off Michael, is the sudden return of electricity demand. The return of load growth after 15 years of electricity demand basically being stagnant. AI, and also just a number of trends that had kind of conspired to freeze and stagnate electricity demand, especially here in the north, namely the shift to compact fluorescent lights and then the shift to LEDs. We've kind of gotten all the juice we can squeeze out of that particular trend. And so we would expect to see electricity demand increasing around now anyway, but AI has supercharged it, and that's been just a tremendous boon for a lot of companies that I think 3 or 4 years ago were planning on describing their portfolio and their technology primarily in decarbonization terms, selling primarily to CSOs, now are thinking about oh, there's all this electricity demand and we need to meet it. And I guess a joke that I would end on is that, and if there's anyone in the audience who does this work or did this work, I apologize. The clean electricity procurement teams at various technology companies, I would say all jobs at technology companies can sometimes be on a gradient of 50% real to 100% real. The clean energy procurement teams at some technology companies, I'm not going to name them, a few years ago, those were great jobs. They were doing things that the company really cared about as an employee perk, and those were solidly 65% real jobs. Today, those are 100% real jobs, and the CEO is directly aware of all the electricity procurement that's happening. And those are central to the company's growth path. They're central to the questions that investors have for those companies. Electricity procurement is central to just how tech companies plan their futures, and that is a huge boon to anyone who was, for instance, planning on building electrification technologies. And I think it's been fun to cover at HeatMap, and I think it's going to be a huge trend going forward, especially as we shift from being demand constrained for AI to now being compute and supply constrained.
I was going to end with career advice to the MBAs, but you just opened that can. We'll keep it down for a little bit. Mendo?
Thank you. Just to round it off, there are 2 parts that are quite revealing. The market dynamics and the geopolitical competition between the US and China. And it touches on what was mentioned before from Michael about the rate of technological project, which I'll get to in a moment. But in terms of the positioning of climate and sustainability initiatives and investments, they're no longer just setting targets. Every client that I speak to, and I get the pleasure of servicing many corporations in the US, it's a conversation with the chief financial officer. They want a detailed business case, and they want to understand the return on investment on every initiative. And that's quite positive, because climate is now a risk. So if you don't deal with it, you won't get insurance for projects. Your premiums will go up. There are a lot of efficiency gains if you act quickly, operational efficiencies along the supply chains. Managing that risk has a climate dividend. It's just like any other risk that a corporation has to manage. Same as sustainability. In terms of sustainability, water stress is one of the biggest factors that are impacting many sectors, including data centers. We take from the earth the resources, we have to manage them, and the dependency on the resources is a big issue. Again, it's a risk, and it goes into a business case that has to demonstrate a return. And that's quite positive, because even despite the rolling back of Inflation Reduction Act and the president who doesn't care about it, business is going on. Now let's pull back. There has never been a time in history where we are witnessing the most amazing and intense competition the world has ever seen. That is the geopolitical competition between China and the US. And that has flow-on implications on all of us, on all sectors. because the technological race for AI, quantum, and fusion dominance is amazing. And the acceleration in the space of 6 months to 1 year on fusion has been phenomenal. Last year, we have our Pinnacle conference in Houston called CERAWeek. There was one conversation about fusion with the nerds in the corner. I was one of them sitting there. On every day of this week, we had venture capital, former heads of governments and secretaries of energy, investors talking about fusion. And that is happening much faster than I even expected. So watch out. The technological race is exponential, and it has many benefits for the world as a result.
Mike, did you want to?
Yeah, so I think the issue of the geopolitical context that we live in today with China is driving a whole lot of investment across asset classes. And I think we should really tease out what's going on there. I mean, the government's funded a number of critical minerals startups and companies to scale, to domesticate supply chains.
Taking equity position.
Taking equity, golden tickets, all of it, which is a new part of the game, to be clear, and we got to understand what that means. But the reality is, China dominates mineral supply chains. And the amount of investment that is required to actually change that game is enormous, and it's untenable for any private sector company and probably even the US government. So the question I have on this is, like, how durable is that? How durable is a above market premium for these sets of materials that if we're making investments that we expect to return in 5 to 10 years, do we think that that's actually going to be the state of play in 5 or 10 years? Or are we just playing the game right now to make a better trade deal, and then globalization is going to kick back in and we're going to be on a more level playing field?
Well, on your point, China has 90% of the world's supply of critical minerals and rare earths. And as you touched on, when it comes to solar, wind, they've got the concentration. And the US is sitting back thinking, why did we do that? Why did we let that happen? Let me remind everyone, you're in the United States. It doesn't matter where the US begins, the question is, where will it end? Whenever there's an urgent need, the US mobilizes like no other country in history. You can go back to the way that Jefferson in 1804 took on the Barbary pirates. Does anybody know what I'm talking about? Great. Because in the infancy of the Republic, Jefferson said, we're not going to pay bribes to those pirates in the Mediterranean. But by the way, the bribes were 20% of GDP back then. It said, we're going to develop our own naval fleet and develop in the space of 10 to 15 years the most advanced naval fleet in the world, taking on the French and the British, just in 20 years of the Republic. Innovation due to a need. We had the oil crisis in the 70s. Out of the result of the oil crisis, we had energy efficiency. We had electrification. The Manhattan Project. The Germans didn't think the Americans could do it. The Americans did it. In every technological race, the Americans have generally won. However, your point is valid. The intensity and the way that China has bridged a gap of the past 10 years is amazing. So that's the catalyst to step up, and it will require a sustained effort by the US to do it. The war we'll get to in a moment. I don't want to go down that track in Iran, but really it's signaling in Venezuela and Iran, signaling to China, you'll have critical minerals supply bottled up now, but we'll make sure, the US that is, we will have energy supply chains locked up, and we won't let you, through a proxy Iran, mess with that. That's where the competition is now.
Well, so before we get to Iran, I wanted to ask Mike and Rob a related question, which is, so you both painted a picture where China is beyond us, if not quickly catching up. Mike, first to you, can we catch up without policy support? And then Rob, to you, is there an appetite for that policy support within DC?
So in terms of, it depends on the domain you're talking about, right? Do I think that we're...
Let's take electric vehicles.
Electric vehicles, I'll add solar and batteries. unlikely. Like we might on the margin, and I think we are on the margin, increasing domestic battery production. Not solar, but battery. I think what matters is that we win the next ones,
Yeah.
right? And so the question is, how do you win fusion when China's throwing 10 times the amount of money into fusion as the United States? Or how do you win even fission? They can build nuclear plants in a very short amount of time. It takes us a decade.
But
So
if you're Detroit, you don't just care about fusion and fission. You do care about cars.
you care about
So
cars.
what's the next vehicle? It's probably another electric vehicle. So can we catch up on the vehicle space without?
Well, I mean, so BYD has a lead, and the trade wars we're in now is we're also seeding Europe. So we're not off to a great start. I think domestically we can begin if we can ramp up manufacturing, but it's going to be tough.
The US has a broader challenge here because American automakers have really never been super export driven. Ford and GM achieved great scale in the early 20th century, but they did it on the back of the US domestic market. And I think one of the nested challenges of China, and a challenge that I don't think I've ever heard a satisfactory answer from a policymaker give, is that so much of why China is dominating in these technologies, yes, they have more people, yes, they've invested in these technologies, yes, between currency policy and long-term R&D and aspects of their economy that favor investment and corporate investment, there's lots of there's lots of policies that help them achieve technological dominance or technological competition. What makes them different is they have a larger domestic market than we do, and that has been central to how industrial policy has proceeded, right? The size of your domestic market. And I think what we're now dealing with in the EV space is that Ford and GM have historically basically mostly sold to Americans. If you look at their balance sheets a few years ago, I haven't looked
At least on
recently.
a profit basis.
On a profit basis, 90% of their profit comes from basically selling SUVs to North Americans.
Right.
And so it's not even like we had great export industries going into this. We didn't really have export-centric car industries. We were at the technological frontier of automobility technology for a long time because we just had a bigger domestic market than anyone else, and we had big factories, and people came from around the world to learn from our big factories. But since the 1980s,
But they run the risk of losing that domestic market too. So in
Totally,
response to
yes,
the
I
oil
agree.
shocks, in order to keep Japan out of U.S. markets, we had to have voluntary export restraints. And Catherine?
I mean, I guess I would just chime in and remind what we teach our MBAs when we teach them game theory, right? If you're not winning the game, redefine the game. So if we're not, we probably cannot catch up with China on critical minerals, but maybe, as Mendo has emphasized, we're really, really good at innovating, so maybe we can catch up on fusion or advanced geothermal, and then when you think about it, an electricity system cannot run on solar and wind alone. You need clean firm and clean intermittent, and so if we kind of have something to balance the Chinese, then we're in a lot better position, right? They can't threaten to cut off critical minerals because then we'll threaten to cut off whatever it is we have. So, I mean, I
Chips.
guess, yeah.
That's the game. It's critical minerals and
Well,
chips.
no, that's it, Catherine, which is that balancing and countering that is taking place. So electric vehicles, I wouldn't worry about it too much. But fusion, the administration, there's an executive order to create a separate class of regulations for fusion as opposed to fission. The new head of the Nuclear Regulatory Commission is going through and revising every single outdated regulation precisely because fusion takes not only fission takes too long, all nuclear takes too long. A few weeks ago, I spoke to the British delegation, the ambassador's team on clean tech to the US. The one technology they're betting on in terms of bilateral trade is nuclear because they know it's bipartisan. Democrats, Republicans will be in lockstep because they have to be. So at the big strategic level, AI is yesterday. Quantum computing and fusion is the race when quantum computing kicks in, we'll go from the dark ages to the future like we've never seen before. It is going to be amazing. And who wins that will have the next 70 to 100 years, and that's where the real competition is.
Mike, does the VC world think in those terms?
I think it'd be hard to back up AI going away with data as capital investment, but I don't disagree.
No, it's not going to go away. It's going to be complemented and accelerated by quantum.
Quantum is AI on steroids. That's
Yeah,
right. Yeah, I
yeah.
totally agree with that. And it just further downfield, I think what's happening with AI today is remarkable and still to be determined on what applications will win, and it's driving a whole lot of demand up, and that's good for this space.
So let's pivot. It took 25 minutes to get through the first question. So, since we promised to get to the war, I guess we should do that. So we were just thinking in the future, but right now we've had quite a few shocks to the system. We had oil prices, the futures prices hovering around $120 a few weeks ago. The actual price, if you wanted a barrel of oil, was closer to $150. How does this new oil shock? We talked about how the 1970s shocks changed things in the U.S. In the cleaner tech world. How does this shock change things? Catherine, you want to start?
Sure, I get to go first again. In my mind, there are two competing narratives, or maybe not even competing, maybe they're living together. I think the dominant one is, as one of my panelists was saying, it's really highlighted the focus on energy security, and that's good for climate tech and for the clean energy transition. Being the wind and the solar, the sun cannot be weaponized the way that fossil fuels can be weaponized. The other narrative that I worry about and that I don't think has gotten enough attention is that this has put headwinds against policymakers that are trying to pass climate policies. So I indicated in my opening remarks, I'm a huge fan of carbon pricing. Carbon pricing has faced headwinds. As when energy prices go up, the Europeans, Kathy Hochul in New York, get kind of wobbly on carbon pricing. And I think I'd be curious to hear the investor and the other perspectives, but as an economist, we need policy. We need to subsidize the green stuff and make more expensive tax the brown stuff. So I am more worried about the second outcome of the war than encouraged by the first outcome.
Yeah, and that fits into a narrative that I wanted to bring up, which the policymakers I talk to, they don't talk about climate these days, they talk about affordability.
Yeah.
Right, and that is a huge headwind in anything that may or may not raise the price of electricity. Why don't we jump?
Well, I would just add to that, not only policymakers like Kathy Hochul, not only policymakers like Democrats on the Hill, Zohran Mamdani, when he ran for state assembly in New York, ran as the Green New Deal candidate, and the first 3 years he spent in the State House were all about climate policy, all about fighting pipelines, all about, it was kind of a restrictionist focused view on climate policy, but it also he was pushing some of the most aggressive state policy for climate in New York. And during his mayoral campaign, with the focus on affordability, when it was time to win, he didn't mention climate change once after April 22nd of last year. Not once.
Wow.
He would get asked about it, and he would basically pivot back to it being a quality of life issue. We invited him to speak at our heat map event. He was like,
Can't associate.
But I'm just saying, it's not only. I think people are aware there's like a climate hush moment happening, and it's like not only happening among moderate Democrats, it's happening among Democrats who defined their politics around climate change 4 years ago.
But that is a very U.S.-centric
It is a
view, 'cause,
US-centric
and Catherine
view.
made the point earlier that in Europe, this is a totally different story. They've now got, on the heels of Ukraine, they now have Iran, and they don't know how, in Northern Europe, they don't know where their heat's going to come from next winter because so much of their fuel is coming from Qatar.
Or you could argue it's the same story, it's just they're on the other side because their affordability issue is getting off of fossil
It's getting
fuels.
even worse.
Our
That's right.
affordability issue might be to pivot toward fossil.
And it's not just there. In Southeast Asia, they're currently rationing jet fuel, right? This is a global thing. Now, and this is so for climate tech companies, electrification, Or heat pumps, it is a tailwind, no doubt about it. I've been in the boardroom where we're like, yeah, let's reorient our whole manufacturing strategy to Northern Europe, and we'll see if that works. However, the big question, again, comes back to durability of this stuff. 5 years ago, Moderna saved the world with the vaccine, and today people don't take vaccines. So that's a 5-year transition of massive change, and I'm sitting here and I'm like, okay, if we are going to take 3 years to build a manufacturing capacity in the UK or in Germany to move from natural gas to heat pumps for steam or heat in other ways, I'm kind of like, okay, is that going to hold? Will the memory of the policymakers in Europe say, we lived through Ukraine, we lived through this Iran crisis, we need to make these investments and we need to pay more than we would otherwise have to pay to get that security? And that's the real challenge today if you're deploying capital. I think it's really hard to bet on that durability.
Mendo, did you want to answer Mike's question?
The war in Ukraine, the war in Ukraine, but war in Iran, they're all proxy wars for the US and China. That's pretty much it. If you go back to the 70s, it was a disaster. We had stagflation. Yesterday I was asked, and I get asked every day, what do you think about the Iran situation? What are the likely outcomes? And you can't say there's one definitive outcome, but you've got to look at probabilities and scenarios. I said yesterday that I think maybe 40, 50% will get a situation where within a few weeks to 2 months, there'll be a significant deal that both sides can live with. They won't get everything, but at least the world can go on economically. And today, we've seen a positive step in that direction. It's not over, but at least we can see there's some common sense and world leaders are pushing these two countries together to move forward in this. What's going to happen with the blockade and who ultimately has more control in the strait, it's yet to be determined. But this is a positive sign. The second scenario is if we have continued stalemate and there's disengagement and dialogue, that's bad. That could be stagflation. High inflation, unemployment, that was a bad scenario in the 70s. I'm more optimistic that won't unfold because of the memory of the 70s. Policymakers were there, and I think there's a lot of rationality in, even if the rhetoric is not showing that, behind the scenes there's more rational approaches. The third scenario, which is a more dire scenario, which is if there's greater military escalation in that region. Now, you can't rule that out, because I mentioned earlier in 1804, Jefferson made the call, we're not going to pay bribes in the Mediterranean. We're going to take them on. If the cost is too high for the US, they will escalate. I don't think they should. There'll be very deep ramifications, and the ramifications for the world. But they're the three scenarios, and I think so far with today's news, I think the first scenario is the one the world should be moving towards. That will mean that the president and politicians are listening to the accountabilities that are in place. The midterms, the sentiment from the public, you touched on it, it's affordability. Come on, people, we spoke about that. The previous administration, this administration, don't do things that are counter to that. Otherwise, you won't get people on board. And you won't get them to listen to your messaging on climate. But a climate is caught up on that because the cost of everything is going up, and every time there's a decision on climate, it's a double-edged sword. Because corporations know if they kick the can down the road and they don't invest in it, the assets, like this asset, are more exposed, supply chains are more vulnerable, and they'll have to spend more in the long term.
Mendo, even in your optimistic scenario had us jumping back to where we were a couple months ago. Catherine, you teach about fossil fuel markets. Do you believe that if the war in Iran was resolved today, how quickly would we go back to $60 oil or $8 gas?
Okay, I think there are a couple of things. Like one, I don't think we're going to go back to $60 oil. Futures markets don't think we're going to go back to $60 oil. Even if we're there,
2041, I think it gets.
Those are very illiquid markets. The gas prices, the difference between gas price and oil prices is going to stick around for a while because the refining capacity was damaged in the Gulf, because we talk about like rockets and feathers, how oil prices go up, usually gas prices go up like a rocket to match them, but then kind of drift back down slowly. And I think jet fuel, there are just a lot of like dislocations in the global oil and gas market that are going to take a while to get sorted out.
Catherine, on your point, I could just add to that. There are a lot of companies who don't want the oil price to go down too low. The fossil fuel companies don't want it too low. You talk to the Texans and they'll tell you openly, its break even is $50 to $55 a barrel. So they can't make a margin if it's at about 60. What do you get? If it's 70, 80, okay, they're getting more comfortable. Now over 100, that's very inflationary, sustained at that level. So, but all of this shows the volatility of these legacy markets, and a consequence of these current shocks, as were the case in the past, that you look at alternatives, which is energy efficiency, conservation around production facilities, around the whole economy, and electrification. You should electrify everything until you can't. And so they're getting more focused. EV sales have gone up about 8% just in the past few weeks.
So I promised I'd turn it to the audience. We've been filtering through your questions, and I think, Tamara, you picked the good ones.
Thank you all, and thank you guys. My name is Tamara. I'm leading content for ClimateCAP, and I'm so happy you're all here. So to start, kind of going off of this, do you think the current volatility of oil and natural gas will push countries to invest more into renewables, or do you think that this will lead to an increased investment in oil and gas, as we're seeing in the U.S.? The end.
Let's start with Rob.
It depends if you have the resources. I think it depends if you have the resources. I think it's pushing all countries to it's one of a number of trends, but it's quite an intense one, pushing all countries to more of an energy security frame, which if you don't have, I mean, this is the key difference between here and Northern Europe, right? It's a lot, to some degree, I'm going to put this in a crass way that I would never, I realize I'm speaking on the record. To some degree, it's quite easy to be pro-decarbonization if you don't have any domestic fossil fuel resources. It's great for you. There's no downside. For the U.S., it's a much harder economic, set of relationships to manage and political economy to manage. Anyway, I think what we've already seen is the initial response is a surge of investment in renewables and EVs, especially in Southeast Asia, where the physical shortages are really hitting first. I think that we could see some amount of a return to coal, the kind of forgotten fossil fuel. But we haven't really seen, globally, yes. But we actually haven't really seen it in the data yet, but it would be not a surprise to see it. I think countries with more oil resources will try to develop them, but they were probably trying to develop them anyway. Maybe the region to watch here is actually South America, rather than anywhere in Asia. And I think the potential loser among fossil fuels is liquefied natural gas, because this is the second huge volatility price shock to liquefied natural gas in the past 5 years. Countries, they're huge capital-intensive investments. There's lots of infrastructure. It's very delicate. Countries are kind of on the fence about making that scale of investment anyway. Maybe this now pushes up just like what they think the median kind of price will be in the future, and they become less willing to invest in it.
So I was going to use LNG to bring it back to the U.S. because the U.S. has about, over the next 10 years, plans to double its export capacity of LNG. And I do wonder whether that will be a good idea. You might get a much larger share of a shrinking market. And do you have thoughts on that, Catherine or Rob?
I mean, if I were a natural gas exporter right now in the U.S., I would want more capacity. I mean, the price our prices have been at $3. Prices in Europe are $18. That's a pretty good margin that I'm missing out on.
But you have to look at where the demand is. As you said before, every country is different. So if you can supply LNG for a country for their power sector, Japan uses a lot of gas for their power sector. Japan imports 94% of their energy. A lot of other countries in Southeast Asia. If they can switch from lignite or black coal to LNG for gas for power generation, far better outcome. So that's where gas and LNG is still that bridging fuel. Getting away from coal as much as possible is still the best option. But the switch is happening. The switch to renewables, alternative energy, other investments, it's taking place.
The delta's just so big. It's just so big that how, and if you are...
But let me play devil's advocate. These
Yeah.
are 30 to 40-year investments. The
Totally.
delta today is not necessarily what you're
Yeah, but they're oil
sinking.
people. They're pretty optimistic, and they think with very high discount rates, low discount rates.
I mean, and if
You
the
guys tell
delta
me
is
which one
that
it
big,
is.
you don't need it to be big for long. You pay
Yeah.
off.
Mike, are you investing in LNG export facilities?
We are not, but that's not our type. That's not our type of investment. I think that the point is, the first thing that will happen is you'll shift production from the Middle East to here, and if you are buying LNG, you'd prefer to buy from here, and there's a lot of market opportunity there for that.
Where it would hurt is, we're talking about spot prices, is that a lot of these investments, right, are financed by long-term two-way contracts.
Right.
And so maybe there are fewer takers on the other side of those long-term contracts, but maybe you just switch when you're doing your next procurement cycle, you switch from Qatar to the US, and then there's the demand, right? So
Yeah,
it's
and
hard.
that
yeah.
switch is going on in the industry now.
Correct.
A lot of LNG takers are leaving the ports not knowing where they're going yet.
Yeah.
Yeah. So, yeah.
Perfect. Okay, following up and continuing on this vein, I think we talked a lot about China and about the US. With this current energy crisis, how do we think this is going to affect global energy markets, specifically the African continent or other emerging economies?
Catherine, you've done work in Africa.
Yeah, I mean, the crux of the crisis right now is very bad for low and middle income countries. The fuel price increases, fertilizer price increases, leading to food price increases. If their populations are on the margin, something like this is really damaging. I am quite bullish in the long run on Africa's ability to have a green growth strategy, that basically a world that values clean electricity, and if we're using electricity to decarbonize aluminum, steel, a lot of these heavy industries, then a continent that can produce cheap, clean electricity, like the solar potential in Africa is enormous. They've got hydro, there's more hydro potential. I think that if they play their cards right, they can really take advantage of the clean energy transition.
And Catherine, I know you want to talk more about CBAM. Do you want to talk about how CBAM accelerates that or provides a tailwind for
No,
that?
I mean, a world that prices carbon and CBAM, as I mentioned, is pushing us more and more towards that world, is a world that values the African clean electricity.
The one thing I'd add is that for the climate story, at the if we're talking about 2C, 1.5C, 2.5C, where we land at the end of the century in terms of temperature outcomes is actually largely dependent on decisions like energy policy decisions and consumer decisions made in Southeast Asia, India, Indonesia, and Africa. And the incredible availability of an alternative to the liquid fuel system in the transportation sector via Chinese EVs, via greater reliance on electricity, I think is already kind of bending the curve, so to speak, on what the development pathway and the kind of carbon intensity of development in those regions will look like. And so it's good news that way. Yeah, it's great
Mike,
news.
how important is the African continent as a growth market for the types of companies that you're investing in?
So I think global opportunity is what we go after. The IFC is one of our partners, and we work with them to help transition new technology to areas across the world. But you can't get there until you prove this stuff at scale. And in order to prove things at scale, you need the workforce, you need the infrastructure, you need everything else. So it's going to happen here first. If it's going to happen, and that's kind of where we look, but we wouldn't make an investment if we didn't think that it could scale to the world.
Mendo and
And look, to be clear, The American capital markets in the United States are phenomenal. They know how to do this. They can finance it all around the world, many examples. So I'm optimistic about Africa, but with the help of foreign investment, they can get in there. And as Catherine said, they don't have to replicate what's happened in the past. The electrification of many options, if it's solar, new technologies, they will get there. The problem is, it's the G20, it has to get their act together more. So in terms of responsibility, the G20 still contributes 80% of emissions. They haven't done enough, and then why are you asking Africa? And that's the ongoing issue. Africa will do it when they can based on the different countries' needs and capacities. But unless China, the US, and India do more, that's where the next 5 years and the next 5 to 10 years should be.
But I guess I'm not asking Africa. I'm saying this is an opportunity.
Yeah,
Yes,
exactly.
and we agree.
Right.
That is an opportunity, as Mike said, with the help of the capital markets who understand how to make large infrastructure work, tailoring it to the African context. And there are many discussions that I've witnessed that are along those lines.
Thank you. I'm navigating many questions. I think on this, and something that I found really interesting as you were talking is why is it important to speak about the energy transition as a race with China rather than the rest of the world just increasing energy efficiencies? Why do you think it's so gamified in all of your opinions?
Let's go.
Great question. So,
Well, because it's exhilarating. I mean, I said before,
so
Let's go to the
if I-
investor first.
Yeah.
innovation is core to economic growth. This comes down to growth and competitiveness. And if you win fusion, you own energy for the next 100 years
Yes.
and maybe longer. And you can deploy it all over the world, but you do it on your own trajectory and how you want to do it. And I think that's the geopolitical game that is important. And I think in all the companies we work with, like the reality is today, it's different than a decade ago. They all need to recognize that they are actors of industrial policy, and they can leverage that, and it can be a real tailwind. But it also does this interesting thing where it puts the incentives of the business. It could be crosswise with the federal government where they are, because for a lot of clean energy companies, you've got to have a supply chain that starts in China, and I think there is a push and pull that is pretty thorny and difficult to navigate. And I'm harping on this issue of durability, but as it relates to China in particular, I have yet to see corporate partners of our companies mandate that our companies have purely US supply chains. And when asked if it's okay for our product to have embedded in it a very critical component that is manufactured in China, they don't care as long as it comes as soon as possible, right? And so that hasn't changed. So this era of competition, it happens at the national level, but at the corporate level, it hasn't quite, even in this fairly hot moment, it has not transitioned down into the businesses.
but that's okay. I agree with you. The point about the competition with China is, as you touched on, in order to get innovation, you need a real need. Go back to Plato. Our need is the real creator. Necessity is the mother of invention. It happens time and time again. Technological innovation, the catalyst for that now is this competition of these powers. And they are locked in. So when they get AI and quantum dominance, that will filter through and benefit every sector. Healthcare, defense, mobility, and clean tech. And it's already having that now. Now, your point, Michael, is correct, which is, will they completely decouple? No, we're not going to go to a world where you can completely have the Cold War version 2, nor do we want to. We want this checking mechanism where the powers realize at some level they have to cooperate. They can compete viciously, but they have to cooperate.
I guess what I'd say is that I don't think it, and I would even slightly defend the panel against the question. The panel's good honor. I don't think that it is, I don't think we see, or at least I don't think of the decarbonization and the kind of race to clean energy as captive or through the lens of geoeconomic competition or geopolitical competition. What I would say is that, first of all, if you are thinking in terms of durability, national competition tends to be somewhat durable, and so it's helpful to kind of think in those terms. Number two, simply like the Chinese manufacturing complex centered in Shenzhen is where manufacturing and electronic innovation happens today, and where a large share of the world's electronics at the technological frontier are produced, if not partially engineered. And so if we're sitting here in the United States having a conversation about electronic technology, as clean energy is, we kind of have to do it through a lens of recognizing the reality of it. I mean, I was talking to a medium-duty electric vehicle truck maker last year. They're close to profitability. It's a kind of little-known success story. And they can get parts from Shenzhen cheaper and faster than they can from a facility in Monterrey, Mexico. And they're based in Southern California. So that's just reality. And then because we're sitting here in the US, we have to have, the political nature of that and kind of what that spins out and means for the economy, I think is just a conversation we have to have.
Michael, maybe this is what you meant by durability, but let's say we do win on fusion. Your claim was we own energy for the next 100 years. How do we win on fusion and in a way that protects intellectual property? So we aren't just leapfrogged a few years later.
So, I think about it, Chris, we've done,
I
from
should
an
add,
industrial policy
while
perspective.
we're outsourcing a lot of the building and potentially in China.
Yeah, from an industrial policy perspective, I think we do a very good job of funding innovation. I should say invention. We have begun to think about what does it mean to fund the next valley, which getting into deployment. We have begun to think about the scaling of that, but we haven't really laid into it. And if we can't do that, then China will continue, Shenzhen will continue to be the manufacturing capital of the world. Yeah. But it requires, and this is where the policy question comes in, it requires us to think much more holistically around an innovation system than the way we have, even through the last administration and the new administration, very much focused on the front end of it.
Right, and we tend to have like a beach muscle focused innovation, like industrial policy, I would say, where we really like, term. Well, what I'd say is like the US doesn't really want to do leg day on this thing, right? Like the US wants things like fusion, it wants things like chip design, it wants these high-end, very end of the supply chain, very end of the value chain industries that are super profitable, that can support high-income jobs, that are relatively professionalized. That's what we like to do. What we don't like to do is like throw a lot of process and chemical engineers at like a particular type of copper ore and then figure out how we're going to extract some rare earth and also the copper from, you know what I mean? Like whatever it is, we do it sometimes, but it's not particularly thrilling to policymakers. It's not something we have the policy like chops to do. And I think a lot of what we're trying to deal with is the fact that we like these kind of charismatic industrial, charismatic mega industrial projects, and we don't like the process engineering or chemical engineering or manufacturing engineering chops that actually.
Well, it depends on which sector.
At the lower end. Yeah, that's true. In oil and gas, we love it. Sorry.
Yeah, but oil and gas replicates hydrogen,
in finance,
wind turbines, everything. So, but let's be clear. If you're an investor, you're going to hedge your bets. Are you going to put all your eggs in a China basket? There's no rule of law, property rights. Are you joking? You have a constitution, you have the Bill of Rights here. Let's be clear. Ultimately, these fundamentals matter. Sometimes investors pay a premium to be in the right country to avoid volatility, the instability of risks such as the Middle East. So they will spread their investment, but you can bet your bet that when push comes to shove, investors, if they had a choice, they'll come to the US because of the robustness of the rule of law here. It's not perfect. Don't let me be a cheerleader here for everything in the US, but compared to every other country around the world, including Western countries, the US system here for rules bases domestically to attract investment is still superior?
Cap.
I guess 2 points. One, I think this is probably implicit in all the answers here, but just a reminder that on a climate basis, we cannot just ignore China. China is 30% of global emissions. Like, we got to do something. We, the world, has to do something about that. But I think that China themselves have made a lot of progress over the last 10 years, decarbonizing their electricity sector. I mean, they've gone from like 85% coal down to 55% coal in not very much time. And you know, I frankly think that they have a vested interest economically in making sure that the rest of the world follows them in those decarbonization trends, because they have been so successful at making EVs and making solar panels, and you know, they're really good at making electrolyzers. So they would like the rest of the world to buy those.
Just like the US, the past 30 years, China hasn't been good, nor has the US in a lot of states, for paying workers fair wage for those jobs. Now, this is the social dimension. So I'm not going to suggest that China's rode the past 30, 40 years with slave labor, with the conditions, with the way the US allowed China not to impose on the world stricter environmental standards. That's the responsibility on the US and Western countries. So that's the reckoning that's taking place now. So when we look forward, China is serving its interests. Its global interest will be secondary. The US is the same, but we cannot repeat the past where, if you want to talk about carbon pricing, the carbon pricing has to include payment for those communities that have to get paid effectively and reasonably in a transition.
I'm not
why don't we take one more?
Okay, well, this is the last question. I think that we've talked a lot about a lot of different topics, and most of the people here are MBAs. Would love to end with just like a sentence or two on what you are excited about and where you see market opportunities. I'm guessing something's gonna be about policy, but really what you're betting on, or think that students, as they enter their second year or enter the workforce, should be thinking about.
For this one, why don't we start with Mendo and work backwards?
It's simple. Just double down, triple down on your core passion. Find out what speaks to you. What's unique about yourself? Whatever that is, go with it. In the long run, you'll be fine. Just stick to that. It's your journey, your race. I, long time ago, decided I want to get involved in this because I want to make sure there's a complementarity and a reconciliation between environmental sustainability and markets, and the two can go hand in hand and complement each other, and find what's yours and go with it.
I think in terms of what I'm excited about, which it may be a durable trend too, is electricity demand, is higher electricity demand. I think that that's kind of that we haven't really had that in the US since 2005. It's already a tailwind for the battery sector. It could be a tailwind for any number of other electricity generating technologies. It's pretty robust, and it doesn't even entirely rely on data centers, although I expect lots of data centers to get built. And so that's what I think and I guess I'm supposed to kind of put a word in here for advanced geothermal, because that's always what people are excited about. But yeah, I think higher electricity demand and kind of its knock-on effects.
So I think the most important thing for MBAs to realize is we've talked about geopolitics and China and Iran and all this stuff, and it is noise. Like, you are embarking on the beginning of your career. I am so optimistic because, one, this room is full and we are in a quote unquote down year, all right? That's awesome, you're here. That makes me optimistic. Going forward, we are on a trajectory that is up and to the right on almost every dimension over a decadal time horizon. And that's because people care, right? We're gonna go through these oscillations and we'll oscillate around that growth. You have to live and be comfortable with it, because this industry changes on a dime, as we've seen just in the last quarter. But overall, it is a wonderful place to build a career. And I'm just so encouraged that you're all here.
I'm going to steal, I had a guest speaker who gave this piece of advice, and I thought it was really good. But he said, think of your career like a T. And so it's good to have something that you're really deep on, like that you are the specialist on, whatever it is, LNG, something about LNG markets or something. But then also, you got to be a little bit broad and able to pivot and, find the opportunities that are there. So I thought that was good advice. But I would also double click on the find your passion. You got to wake up in the morning excited to go to work.
So I might take the moderator prerogative and also answer the question. Climate's not going away. And we need more innovation. We need more passion. We need more science. And climate is just the perfect storm of so many important fields, which is why I love being at MIT, because I get to talk with the physicists who are working on a more powerful magnet to make fusion a reality, or Quay's Energy, who could use microwaves to dig as deep as we want for advanced geothermal. So this is going to be an important topic for the next 20 to 30 years. I would say more important for the next 20 to 30 years. So I think you're getting in the right space, and don't take the last 2 years or year and a half and the next 3.5 years or 2.5 years as any indication that climate is any less important than it already is.
Thank you so much, and thank you for ending on a positive note.